China's industrial profit fell sharply in April, shrinking 8.5% from a year earlier. That is the worst drop since March 2020 and comes as high raw material prices and supply chain chaos squeeze margins and disrupt factor activity. Despite this, stocks are bouncing in Asia this morning. Hong Kong's Seng is up 2.3% as Alibaba's shares are surging 13%. The company reported better than expected fourth quarter earnings despite macro challenges that impacted supply chains and consumer sentiment as well. China's Shanghai Composite is also higher this morning following an unprecedented nationwide meeting via teleconference held by Chinese authorities in a bid to bolster an economy battered by COVID. Premier Li Keqiang warned of difficulties even greater than the severe shock of the pandemic in 2020. Now, let's try and understand more about this topic. We have Victoria Scholar with us. She is Head of Investments at Interactive Investors in London. Victoria, many thanks for being with us today. So first of all, China's industrial profits was the worst print since the very beginning of the pandemic. That's March 2020. But this morning, Victoria, we really are seeing positive markets in Asia, in Hong Kong, in China as well. Is this because investors now are expecting more stimulus, even more support by the PBOC? Is that possibly one of the reasons?
Well, clearly we're seeing that China's draconian zero tolerance to COVID policy is taking its toll on its economy. But we are seeing a bounce in markets, partly thanks to strong earnings from Alibaba. But in terms of the figures, the economic figures today, they really confirm what we saw from other data, industrial production and retail sales, which have been softening. And that's why we've seen the central bank step in to cut one of its key lending rates last week. And that was the second time this year. I think we might expect some more fiscal policies to help to try to boost demand and kind of curb that economic slowdown. But, despite the pressure from this zero tolerance policy, President Xi does not want to deviate from this plan, even though it's potentially threatening the government's 5.5% growth target for the year.
Right. And Victoria, we've said it, one of the reasons behind this Chinese slowdown was certainly high raw materials. Obviously, oil prices are playing a big role here. What do you expect from the European Council's next meeting? That's on May 30, next Monday, next Tuesday. I mean, because EU sanctions really require unanimous support.
Yeah, well, there's been talk of sanctions, and there's also been this discussion around a possible EU ban on Russian oil. And the European Council president said he was confident that he could get a deal agreed by the 30th of May, so by that meeting. But like you say, it requires unanimous support, and Hungary is really the key stumbling block. It's pushing back and asking for 750 million euros to upgrade its refineries and expand one of its pipelines to Croatia. But in terms of oil prices, we're seeing them pull back a little bit today, having hit 2-month highs just this week. The market is trying to weigh up concerns about softer demand from China, the world's second largest economy. But putting a floor on prices is this possible EU ban on Russian oil. Plus, of course, there's OPEC, which has got its meeting coming up soon, and that's expected to stick to its real drip feed mentality when it comes to supplying the market. So that's also helping to underpin prices. But largely, we've seen oil stuck in a range lately.
Absolutely. We'll keep a close eye on oil markets starting from Monday. Victoria Scholar, many thanks for this analysis.